SpaceX lost $1.2 trillion in the past 6 weeks. Here's what happened and what it teaches every investor. And please subscribe to my channel, it really helps out. If you have any questions, leave in the comments below and please give this video a like. And today we'll be going through why SpaceX lost $1.2 trillion in the past 6 weeks. So, the biggest IPO in US history. So, on June 12th, 2026, SpaceX went public and the market went wild. The IPO price was $135 and the peak price was $211, meaning the peak valuation was $2.6 trillion. So in just a couple of days, it increased from $135 from its IPO price to $211 at the peak price. But then everything fell apart. So as you see in this graph, the IPO price on in week one is $135 and it skyrockets to $211, but then it starts to decrease to around $105. So shares fell below $135, which was the IPO price, and it is now 20% below the IPO. So it erased $1.2 trillion in the market value, and it was 50% from the high. So early investors decided to cash out. The classic sell the hype pattern played out in scale. Early buyers who got in at the IPO price of $135 saw massive gains within days, and many took them. So the pattern is that they buy IPO and they watch it pop, but they sell into strength. So the valuation over time got a reality check. So in 2025 net loss, $4.9 billion, a significant loss in the year before going public. In quarter one of 2026, it got a $4.28 billion loss. But it loses, but chose and continued into the IPO that year. The question was, does a $2.6 trillion price tag match fundamentals when the company is still burning cash? So a trouble sequence. After days of raising $75 billion in the IPO, SpaceX issued another $25 billion in debt, signaling urgent capital needs. Short sellers responded by building near 4 billion in bets against the stock, betting the decline would continue. So it was a $75 billion IPO raised. Then immediately $25 billion more debt was issued. Short sellers built $4 billion in bearish bets against the stock. Bullish analysts targeted issue but has no effect on deadline decline. So the twist was Wall Street was bullish right before the crash. So Wall Street really intended for SpaceX to really gradually increase in value because of how great Elon Musk is as a CEO, but it started to actually decline, and major banks raised price targets in mid-July, signaling confidence, but the stock fell anyway. And days later, shares dropped below $135, which was the IPO price. And the lesson was analyst optimism doesn't protect you. Just always look more into the company before you really invest in it. This isn't just a SpaceX story, it's an IPO story. So 15 years of data tells a clear story. So over the past 15 years, high IPOs have fallen an average of 52% 1 year after their first trading day. Only five companies out of the entire group finished the year positive. Palantir, Airbnb, Arm, Snowflake, and Maple Bear. SpaceX may be following the exact same script, and history suggests patience pays off. So as we see here, average high IPO decreases in 52% after the first year. In the first year, they lose 52% on average, but other great companies somehow gain a positive value, such as Palantir, Airbnb, Arm, Snowflake, and Maple Bear. So, what this teaches every investor is a hype IPO is often an exit, not an entry. So, early investors and insiders are selling into the pop. You're buying their shares at a premium. Big first day pops don't mean long term value. Initial excitement is emotional, not analytical. Wait for the motion to fade. Volatility after an IPO is normal, but wait for signals. It's not a red flag on its own, but it is a reason to pause and let the dust settle. So, should you buy SpaceX right now? Um, watch what to watch out for. So, first, public earnings report, revenue margins, and the path to profitability, Starlink subscriber growth and revenue contribution, progress on Starship commercialization and NASA contracts, and whether short interests begin to decline. The disciplined approach. There's no universal right answer, but the smartest move is to wait for clear evidence of execution before jumping in. So I would recommend that you wait to see if it really matches your investing style. Just wait and get to know SpaceX a little bit more because it just IPO'd, and watch for SpaceX first earning report as a public company. That's when you get a real sign of whether fundamentals can support the valuation. And subscribe for more breakdowns of the stories in investing explained simply. Thank you for watching, and please give my channel a subscribe, give it a like. If you have any questions, leave in the comments below. I'll see you in the next video.